Good morning, guys, and welcome to today's edition of the London Session Open. Today is May 26, 2020, and it's 9:45 a.m. in London when we're doing this market update. I hope you guys had a good weekend. I am based in the UK, so we had a public holiday yesterday, and it was also a public holiday in the US. So markets were a little bit quiet, but Europe hasn't been holding back with the DAX actually reaching some new levels. And if you've been watching my analysis over the last few weeks, I've been looking for a break to the upside, and that actually happened. So hopefully we can have some continuation and further higher stock markets, because they have been a bit boring. But now, as the UK is gonna open up like non-essential shops from June 15th, and there's also talks in Spain, opening up for tourism again, and as well Lufthansa getting itself a bailout. Things are starting to look brighter again for the world economy, and markets are going upwards, and that is always encouraging. So we're going to talk a bit about that, and then just out of curiosity, I actually just was looking at the Dow Jones. We're going to take a look at the Jones. What happened in 1919 and 1920 when 50 million people died because of the Spanish flu? Well, we'll show you that in a few minutes, but it's definitely interesting to see, compare it with today, just to get an idea of the situation. But let's begin with the charts, and we're going to begin with the Dow Jones. So the Dow Jones is having a breakout. The German DAX had a breakout already yesterday, but the Dow Jones is now trying to follow suit. The S&P as well also had a breakout, so things are definitely looking encouraging. So you have this big range, and the market is pushing to the upside, and this would constitute a breakout if we close at these levels today. Now, we are far away from any close, and the cash markets have been closed in the US, so it might be all wrong, but the German DAX had a very positive day yesterday. It's continuing today. It's not just here, it's Australia, it's New Zealand, this Netherlands. There are many different places in the world where you're seeing higher stock markets today. So how do we deal with this one, something like the Dow Jones? Well, a break to 24,877, that will trigger the breakout, which we already have. And then the trend is just going to be bullish above 24,086. Normally we look at the S&P, and the S&P already had a breakout here on the 25th, and that was the breakout. Now you're having continuation. Difference between low and highs to give you the target of 31.98. You also have a high here for March 4th. That is what people are targeting, and here the situation is quite straightforward. The trend will remain bullish as long as trade above 28.74. And the way this works, one can buy the breakout. That one is already in motion, and we can easily go back down again, but as long as you're above this level, we should be fine. In fact, I would like to put my stop loss at 29 and save a bit here, but I'm gonna leave it like that for now, and we might just pull back a little bit, but then eventually ultimately higher. We never know for certain. That's the issue with this one, and that's why we should never go too heavy in any trade. But it's looking encouraging. It's not just here, even currency markets. If you look at pairs where like Aussie dollar, New Zealand dollar versus things like the New Zealand dollar versus the Swiss franc or the Japanese yen, or currency pairs that mimic the stock markets well, they're all higher, and some of them are trying to break out as well. So actually they are trying to break out today. So it's not just stock markets doing their own thing, it is currency markets as well mimicking and seeing better times ahead. And we did get some reports yesterday that we didn't talk about yet. We got the IFO number from Germany, and the IFO number is like a PMI, and it has a high correlation with German GDP. And what I find interesting is the expectations index, which is clearly moving upwards, and again telling us what we already know. The stock markets have been telling us for some time, and that is we're gonna be fine, and it's time to be bullish. Of course, this companies like Lufthansa are getting bailouts, and that's always going to be an issue. There's people that are going to definitely lose their jobs. However, I saw some report, I don't remember the figures exactly on top of my head, but I think fiscal stimulus in the US is about 12% of GDP. And then some other people looked at what the central bank did, and it was also something like 10% or something like that. So if that is true, then just in the US, they have pumped money of the equivalent of 25%. That's like a quarter of the whole GDP. then the idea is this: yeah, okay, maybe the economy will contract hugely, which it probably will do, but government is there to support that whole, and and if things recuperate and turn out good, we might not decline so quickly, or we might not, I mean, we still might decline, but we're probably going to come back up online very quickly again. So then what's going to happen is that you have people with money because they're getting some sort of support from the governments, companies are getting some sort of support, and then these people again start to consume again. And I think I saw another report. Now I don't really trust that 100%, but apparently a lot of people that had received money from the governments used that to buy stocks. So maybe they don't actually need the money. Maybe, I'm not really sure. But long story short, there's so much liquidity in the market right now, so you don't want to be fighting it. And that's what I've been saying for a long time. And then people say, well, you have the high debt. Yeah, I agree. And we talked about this on Friday as well. And if it is a situation where you have the government trying to pay back all the debt they borrowed in a short period of time, then you have issues. So if the UK government would go about what the other prior governments did and try to sort of reduce the debt by not paying people in the public sector salaries, no increases for about 5 years, I think, then obviously you're going to have an issue. But if you try to take a sensible route out of this and say, okay, we're going to pay back some of it over the next 10 years, and then we put the rest, or pay back in 100 years, then that's something that will be spread out as long as the economy starts to improve and produces more, because then you can have higher taxes, higher tax incomes, and then you can pay it back. So that's a challenge. Now is the German DAX. The German DAX already had a breakout yesterday, solid breakout here on the 25th. This is gone, and I don't think it's going to come back. I was looking at the Aussie stock market as well. I'll just shoot straight up. It's not coming back the way it looks like. Can it come back? Of course it can come back, but it probably won't. I might be all wrong. Now, if it does come back, so if it does go down to the breakout point at 11,244, I'm going to be bullish. I'm going to be bullish as long as we trade above 10,843. So no change to the outlook here. Euro USD then is trading slightly upwards today. We'll continue to trade sideways between 107.51 and 110.17. There's no reason to push or do anything here. This plain vanilla thing, which is what the euro dollar is, there's not a lot of activity here happening. And again, if we take out the high, I'll become interested again. Until that happens, we're trading sideways. Some people might be selling here for it to come down, but again, I don't really like, personally, I don't like sideways ranges, especially not when you have markets moving. GBP versus the USD is up strongly as well. So a few weeks ago, I said, look, to sell here for it to come down. It went well. Then when we went up here again, I said, people are probably going to sell. We're in a bit of a profit for a little while, but now we're going upwards. Why is it like that then? Because you see currencies like dollars or African rand, dollar Mexican peso, we have saw tremendous weakness in these currencies and tremendous flows going to the dollar when things were at their worst. However, now when things are settling down, and those trends are reversing, and that's why we're seeing this little push as well. The UK did announce yesterday that they will open up non-essential stores by June 15, and that could lend a bit of hope to the markets here. But they're not completely out of the woods, and later this week, the MPs Gov and also David Frost, which manages the UK Brexit negotiations, are going to be quizzed by MPs, and we might get some updates on what has happened on that front over the last few months. However, there's obviously challenges. Both David Frost, which is the head negotiator for the UK, and then you have also the Michel Barnier, which is the head negotiator from the EU. They did have symptoms of COVID-19 that we reported on here on this show a couple of months ago. I don't know exactly how that planned out, if they indeed had COVID-19, but I do know that if you have the two top negotiators in both countries being sick, there's probably not going to be too much negotiating happening. So we're going to get a bit of an update on that, and I think that is something that will come back later this year. It's going to be talked about. It's going to be mentioned a lot how that is going, because otherwise the UK will most likely crash out of the EU by the end of the year. Aussie dollar versus the USD is a bit quiet. It's not doing too much. It's trading sideways between 108.09 and 106.68. You take out the high, things turn bullish again. Gold prices over the last few days, we said to people probably gonna try to buy in this little spot. I continue to hold that. outlook, if we just clear everything out, it's quite clear we're just going upwards and we're now correcting. And here we just need to be patient. Last time we selected buy in this little spots here, and that took about a month for it to develop. Can't unfortunately do nothing about it. I can just give you the levels, but there's when the markets go quiet, they go quiet, and sometimes they go quiet for a long time. So I'm just going to continue to leave things the way they are. Finally, let's take a look here at the stock markets, sorry, crude oil markets. And this is the June future for West Texas. And the market is now, it had a bit of a slump and then it's back up again. And it's trading sideways between 130.72 and 194.93. It would be really good actually if it comes down, because then you have a double top. And then what happens is that you can go long on the double top on the breakout, and you'll have a nice little price target. Right now it's just price going up to the prior high, and if it just takes out the high without really going up or down first, there's not going to be a double top, which is just going to make it quite difficult to figure out what to do. But take out the high, things turn bullish. Take out the low, things turn bearish. For now, I'm neutral within this little space. Now we need to go. Actually, it's 10 a.m. already, time flies, but we are going to look at the Dow Jones, and I do want to show you something. So we're going to see and this one. So what happened here, it is, let's see if I can go back. How much can I go back? So I just wanted to take a look at something here. So this is, so the situation with the Spanish flu emerged somewhere around December 2018. So it was in play from 2018 until December 1920. And it's quite interesting to see how the market actually gained despite that situation. And then the market, from its high to its low, when it bottomed out in August 2021. So about 8 months after, they knew that things were over, the market bottomed out here. And that was a slide of 46%. In the Dow Jones this time around, we had a slide. It wasn't as significant, but it's quite interesting, because it's not a huge difference between the slide. I think this slide is like 34% or something. And this, again, as you just saw here, was some 46% slide. But what is also interesting is that eventually the market recuperated everything. In fact, it went quite quickly. When the market sort of figured out that, well, it's not that bad, and then by 1 year later, the market was up 60%, and then it traded sideways. And then it eventually went up higher and took out all of that. And the reason why stock markets eventually always go upwards in the longer run is because the way we humans are, we always try to improve our lives. We try to do our work better. And all these companies there, the way they make money is by making life better for us. And what happens here is that the Dow Jones obviously always incorporates the best companies. So it's not the same companies that were around 100 years ago. They're the same companies here. The way this works out is that the bad companies, they were removed on the Dow Jones, and then they put the next one in. So you always have the top companies there in the Dow Jones. And it's like that with all stock market indices. Well, most of them at least. So you have that situation where it's only the best companies there, and these companies make money. Not all of them, of course, but I think all of these companies make money. And that is why we always see higher stock markets. But what's also interesting, again, is that 50 million people died on the Spanish flu. 50 million. And this far in the coronavirus crisis, total deaths have been 347. So we're far, far away from what happened back then. Systems and markets are very different as well, because back then you had a World War I. So you sort of forced to go out to fight even if people go sick. And in fact, the war probably spread the virus back then. But yeah, so I don't think, as I said before, as globally as thankfully I don't know anyone that actually I know somebody that got the virus, not in the UK but another country. but no, I don't know anyone that has died because of it. And obviously on an individual level, it's always bad when that happens to someone close to you. But from a worldwide global perspective and market trading perspective, importantly, because this is what it was all about, then the situation is actually not that bad. Okay, guys, unfortunately, I need to leave you guys. I don't have time to answer questions. I'm going to see if anybody's in here, but unfortunately, I need to leave you guys because it's 10:05. I should have left like 10 minutes ago, 5 minutes ago already. But we have Maurizio there. Good morning to you. We have Stefan as well. Alex, why are the smart people advised wrong in the markets and all normal people advice usually lost for a very unique situation? I'm not really sure. I think the seriously, if you look at all legendary investors of last 5 years, fall down lost. So I think I know what you mean. So there's some people there that are like, and we have a new member or a new guy here. Thank you so much for joining us live. So just to look it up there, Stefan. So the way there are perma bears in the sector, like you have some perma bears. There's some people that are wealthy and they're always looking for that big crash, and they're always trying to, and that's usually when they get on the shows as well, because people want to hear this. People want to get ready for the next crash. You know, people love that. I thought about that as well. Why are like people that are usually negative on the markets in the world, why do they have like hundreds of thousands of followers? And why are people always following these guys, and they put some silly statements out, like, and then people just like them a lot? Why is it like that? I think because we as humans, we like scary stories. We don't like the normal story. Nobody wants to hear just buy the trend and you'll make money. Rather, people prefer if they say, look, if you don't do this, if you do that, the market's going to crash, and people just get excited. So we're like little kids around a campfire, just want to hear the most interesting story. So I think that's a little bit, but what's happened here though is that you have some people like Ray Dalio, for example, and you have certain people like Warren Buffett. Warren Buffett is always bullish. He's not going to tell you to sell. He will sell sometimes, but he's always long. For example, Warren Buffett. So what you have is that you have some set of billionaires and money managers that are usually quite optimistic, and then you have a set of people that are usually bearish, and some of these, you know, you might think that some of these guys have superior track records. Some of them have, but many of them don't. Even Warren Buffett, not I think it was the year around 2000, he had like a 50% drawdown in his share price. He has all this money in his share price. I think his share was down 50%, and for 10 years his share didn't do nothing. Well, everybody was just all tech stock was just going up and up. So people said, okay, for 10 years Warren Buffett hasn't done nothing. So even he's not a trader, but if you look at it, if he was a mutual fund, he would have gone out of business already, because nobody can withstand a 50% drawdown. So what happened here is, I think, is that we put these people in a spot where they maybe shouldn't be, because many of them have track records that are not too much different to other people. It's just that when you're managing billions of money, well, millions really, if you do 10%, you know, on a small amount of money like that, you make millions. So you just need to pay attention. Some of these gurus are usually bearish, and then everything they say is usually bearish. And then you have some of the people on the other side. So I guess you need to listen to both camps. And I think as well, some of these people that are usually bearish, they might be really bearish on something, but then they would hedge their positions. So they have their main view, and then they have alternative positions. So if they're not right on their main view, they will make something else on some other places. And they're a bit more sophisticated than many of us are. But again, how can they do that? Because just to make it simple, super simple, you manage $200 million. If you make 10% 1 year, that's $20 million, right? So $20 million, you know, you're going to be set anyway. Obviously, that's for the clients. You need to split that. You get 20 out of 20 million. You get the picture, right? So some of these people are like that. They're sitting in that boat. So even if they just make a 10% return, they're going to be good. and that forced you to say crazy stuff on TV and not crazy stuff on TV. In general, remember, 70% of all years stock markets go up for the last 120 years. So that's why I have always been very cautious about short selling the stock markets. Okay, guys, we need to wrap things up. In the chat box there, you're gonna see that you have my Twitter. Don't forget to follow me. Don't forget to follow the video as well, or follow this channel. And I'll see you guys tomorrow around 9:45 London time. Thank you, and bye-bye.